My name is Garen Phillips. I've been teaching myself the stock market for about a little over a year now and documenting my progress along the way to help you learn with me. And today we're going to go over the Monday recap of my trades. And there's not really much to show. If you've seen the other recap videos of the previous weeks, I'm making the same mistakes. So instead of going through the exits and entries, I'm going to talk about the psychology of what's happening and why I'm doing this. So I just took a break from the stock market after losing 3 consecutive trades in a row red, and I've had the past 4 trading days that I've actually taken trades have all been red. I'm down over 60% on my account, on a $500 account, and actually well, I won't even get into that. It's actually a $700 account, but I figured it as $500, so I've actually got a little bit more room to lose. But I just got back from the gym working out, and I was listening to Trading in the Zone. It's one of the more recommended books for day trading. It's a book I recommend to people that have at least gotten a month or so of experience in live trading. It's a book that won't really make sense to a newbie trader that hasn't taken some losses and actually traded with real money. But it is a really good book. And in it was a lot of the things he was talking about really were exactly what I was making mistakes on. So let's rewind a little bit, and I'll talk about my trading. My trading statistics were actually about a 40-50 win-loss. I was getting up to 50 and doing decently on my portfolio was coming back up to break even. And then I had 2 massive red days, and they hit me hard and really set me back mentally. And after that day, something changed, and I haven't really noticed this until now. I began worrying about blowing up the account, and in Trading in the Zone, one of the chapters, he's talking about you can't anticipate being right or wrong in the stock market. It's purely a probabilities game. You don't know whether the stock is going to go your way or not. You just have a risk-reward calculation that's really the only thing you control in the stock market is your entries and exits and risks. So after I had those 2 days on big losses, I started to worry about making good trades. I pretty much told myself that I can't have a losing trade or else I'm going to start blowing up the account. And the truth is, thinking that I have to have perfect trades is making me have bad trades. It's causing me to get anxious and then jump into trades when I shouldn't be jumping into them. And if they go wrong in any way, I cut out and lose. Today on SQ, my prediction was bullish, and it went bullish. But I lost money on this trade because I got impatient and jumped into it on the high end. I think my first entry was like 70-50 right on the opening bell or something like that. I jumped into it chasing it, thinking that it was going to go break to the high of previous, and it pulled them back immediately, came all the way down, and I got stopped out for a loss, and then I tried to revenge trade it and lost even more money. So my issue is not sticking to my strategies, but psychologically it's trying to be perfect in my trades, and you can't ever anticipate being perfect in trading. That's not how it works. Even some of the best traders in the world have a 50-50 win-loss. I'm going to lose trades. I'm going to have bad trades, and I'm going to have trades that don't go my way, and I need to accept that. This past week or two, as soon as I had those 2 big red days, I've been fighting every single trade, trying to make the trades perfect. And while a lot of my predictions are correct in the way that they go, I end up still being red and losing money because I'm trying to make the trade perfect. I'm trying to micromanage it, really. One of the other ones was ICPT. I got into it on the first pullback short after it broke. I think I shorted it on the 3-minute. I shorted it here, came down. I was in the green. I should have limit ordered. I did not limit order, so I actually lost money on that too. Being impatient and counter trend trading, which I told myself I'd never do. Again, ended up bouncing and going long. So that was a incorrect prediction, but it was also a mistake that I've been making. Counter trend trading. And then NVRO, this one I was in long at 61.89, 61.89, and I mean, as you can see, it went well above 61.89. I was pretty much shot at this point getting into this trade, and I don't know why I just didn't let it run. But you know, that's 2 points right there of profit that I could have made. So two out of the three trades today could have been green. One of the trades I shouldn't have even taken because I shouldn't be counter trend trading. And I think my biggest issue is just trying to be a perfectionist. It's perfectionism and being impatient is costing me the most money, and I need to stick to my strategy and let it play out and I need to just let it go, and I need to accept that some of these trades are going to be red, but so far most of my predictions are correct. I just have to wait for a good entry and a good exit. Other than that, all of the losses that I've made in the past 2 weeks have been purely because of me. It hasn't been because of the strategy or because of the error on the technicals. All right, so I just fired up the chat real quick just to see what you guys are asking. So I wanted to keep the chat shut down while I did that little spiel because I knew it would distract me. But if you guys have any questions or anything, I'll answer them real quick. Dog track yak. That is absolutely true, Richard. So you know, my entries are a bit heavy. I need to have looser entries. I'm thinking so. The trade on NVRO. Let me slide this over. The trade on NVRO. The correct long position on this would have been entering down in the 60s. I didn't catch it. It got called out in chat, so I was a little late to the run. But even late on the run, I still had a full move here on an uptrend. I could have risked half. I could have doubled my risk. So my entry was 61.89. So way down here. I could have risked all the way down there. Let's do a blue line for my entry. So yeah, this would have been my risk reward. I would have it would have been under a 1-to-1 trade, but it would have been a very low exposure and risk on this trade. If I had entered it here, I could have stacked into the trade and actually made a pretty good, like a 2-to-1 trade. But from here to here, this is a $3.74 move. So that's a $2 move. So it would have been like 60 It would have been a 0.6 to 1 trade, which is not a good ratio, but it still would have been green with a high probability because I would have been up on the trend. I could have waited for confirmation on the break on this candle and gotten into it. Or if I had gotten into it correctly down here, or even better down here on the break with the EMAs, my average could have been way better, or could have been down here, and I could have stacked into this and made a fantastic trade. Same thing with exact same thing with Square SQ. So I watched this I've been watching for this for the past 3 days. It's did a full 50% retracement and bounce, and it was a pretty good probability that it was going long, especially with this big flag in the morning. But I jumped into it on the high end, chasing it instead of just waiting. I think my first entry. Let's look at my first entry. It was 9:35. 9:35. Like that's way too early for the style of trading I'm trying to do. Um, if I just waited 3 more minutes at where was the pullback? The pullback was at 9:45. The low was at 9:45. So if I just waited 10 more minutes on the open, I could have got a fantastic entry way down on the low end of this trend. So with this pre-market trend right here, I could have gotten in right here, anywhere here, with a super light entry and had a fantastic entry. Um, this full range just on the day is $2. So I could have done a $2 stop loss, which would have been way, you can't even see it. It would have been way right here. So this would have been my stop loss. So, it's pretty, I could have stopped out with I think I'm risking 7% right now on my portfolio. Let me pull up my cheat sheet. Yeah, 7%. So I could have stopped out of this thing at like a 2% loss. And if it did a full 1-to-1 trade on my first light entry, I still would have made a 1-to-1 trade. I could have stacked into it as it confirmed and made a 2-to-1 or a 3-to-1 trade, and still had a fantastic stop loss. But because I was impatient, because I'm making the same mistakes over and over and over, but the driving forces behind the mistakes is my perfection, my perfectionism, and trying to not have a bad trade. I'm not accepting the fact that some of these trades are going to go the wrong way, and the majority of them have been going the right way. Actually, my predictions are correct. I'm just fighting everything. And I think having the live stream is also putting an added pressure on me. There's definitely a pressure to perform with the live stream. I feel like if I don't take a trade, I feel like there's nothing really happening. Then you guys are just sitting here watching nothing. But sometimes that just has to happen. Like especially as a newbie trader, I can't be. A newbie trader really shouldn't be taking a trade every single day starting out, because you just don't have the experience for it. And chasing these trades is also partially me trying to perform for the stream and get people to keep watching. And that I shouldn't be trading like that. SQ might be breaking out right now. If it breaks this range on the $80 or the $71, it'll probably rip. We'll see what will happen in the next 15 minutes, but it's fear of missing out and perfectionism. I would say that performing for the stream is fear of missing out, but perfectionism is definitely a factor. So before you have to know a little bit about my background to understand this. I was a machinist before I started learning day trading. I worked in a foundry and machine shop as a CNC programmer, and CNC machines basically cut metal for a living. I cut metal and made parts with extreme precision. Like I could cut metal within 0.0005 of an inch. I could actually get down to 0.0003 of an inch, which that's take out one of your hairs and slice it into 3 pieces. That's how precise I could cut metal in my career, and I did that for about 7 years. And honestly, if you're not a perfectionist as a machinist, you probably won't have a job. It's a job and career that demands absolute perfection, because if you don't, you can't be off like an eighth inch and just go, oh well, whoops. I've just been trained to always be as precise as I possibly can be, and that's not the way to trade, because trading it's about statistics and probability. It's not about getting the perfect entry within 3 cents of the bottom or chasing the trade and stuff like that. It's not. I need to manage my perfectionism and keep it outside of my trading. I need to be a perfectionist on my stat tracking and uh, calculating my risk and rewards and stuff. But as far as managing the trades, I just need to set my limit entries and just let them go. And if they break down and show weakness, get out of them. But you know, there was no point in this trade that it showed any weakness. All of the EMAs on every single chart are bullish. Every single one. Every single indicator I have on this chart right now. You might, if you're new, you probably can't read them all. But every indicator on this chart is bullish, except for the 10-minute SARs, the SAR parabolics. Other than that, every indicator is green. It's not even about predicting the future. I need to accept the fact that I don't know what's going to happen in the stock market. Nobody knows what's going to happen. If you're trying to predict what's going to happen, you're basically assuming that you can guess what 10,000 other people are going to do when watching the same stock. There's at least 10,000 people here sitting here watching SQ right now, if not more. Not to mention just hedge funds and everything. You can't possibly be able to predict that. The only thing you can do is have a good risk to reward setup with with indicators or a strategy that give you a bit of an edge over which way this trend is going to go. Like, there's a lot of signals here on SQ that show bullish, but that does not mean that it's going to go bullish. It could still break down and rip the other way, and that's one of the things you have to accept in trading. That's one of the biggest mistakes with holding the bag for newbie traders is they want to be right, so they don't close out of the positions and they don't take a loss because they feel that they should be right and that the stock should go this way. And you can't trade like that because it'll end up blowing up your account, or you'll just hold the bag until you drop to zero. I know, and I would in the long run too. If I don't take a trade one day, but I get better every single day and I make green trades and the account keeps growing, that's going to be better for me in the long run, especially for the YouTube and streaming and all that, because it's much better to watch somebody making money than it is to losing money. I don't think this is going to break. This would definitely be a great swing long if you had a good entry. This will probably gap to the previous highs, and we might even get a breakout. So not only did I lose money today on this trade, I could, with the finish that it's having right now, it's having a very strong finish. This would be a solid swing trade. You could sell out half of your profits here just to lock in case it goes wrong. But there's a pretty high chance that this is probably going to go long for tomorrow. And I'm losing more profit. On a swing trade, I could be making even more money. And then if it breaks out on a 52-week high and runs let's see, the last breakout was fib high and low. The next price target is going to be above 75, somewhere around 75. Probably bounce off the $5 mark if it runs hard. Depends on the price action, but that's a 7-point move on a swing trade, and you could stack into that as it continues. But I can't because I was impatient and not taking good entries. Yeah, that's absolutely right, Richard. I'm way too impatient. I don't let enough time play. I overanalyze and micromanage my trades. I'm even thinking about taking this 3-minute chart off my charts because I really don't. I don't even think I really need this chart right now. We're just going to minimize it. Actually, I gotta do something real quick. Yeah, so that's my Monday morning. I guess I will. I need to do last week's recap video, but It's not even analysis paralysis because it's not like I'm being paralyzed into entering. I'm entering trades. I'm just entering them at the wrong place. Um, I'm not listening. I'm not waiting for the good entries because honestly, I remember this morning when I watched SQ on the bell opening bell. I saw it run bullish, and I thought that it was just going to run, and I didn't want to miss the trade, so I jumped into it. And then it immediately reversed on me and pulled back all the way back to my entry where it should have been. I should have just waited and set a stop loss or a limit order down on this low end. I don't really have any scanners right now. I'm just kind of chat rooms and um, pre-market gappers, and that's pretty much it. Yeah, my entry and stop losses and risk to reward calculations are correct. And if I let the trades go the way that they are supposed to go, I would be making 1-to-1, 2-to-1, or even 3-to-1 trades. So this trade right here, let me delete some of these lines and we'll just look at the hour chart. So this risk to reward here is off the open, this break, off those wicks. So if I entered down here, that's a $2 move, about 350. I could do a $2 move, a $2 stop loss here, and this trade would be a 1-to-1 2-day. It's probably going to go long for tomorrow, and that'd be a 2-to-1 on a swing trade. But I wouldn't swing full size. You'd downsize on it, and it'd be good. And if my stop loss was hit, my stop losses are calculated by my cheat sheet here, and I would lose. Right now, I'm risking 7% of my portfolio with I'm 90% of the portfolio tradable. Probably should just do 100 because it's such a small account. So if my stop loss is hit, I lose $18, and this is where the probability and statistics come in. If the majority of my predictions are correct, it's my entries and exits that are fucking it up and making me lose money. If I stick to waiting for good entries and I only get into trades that have good entries, my risk to reward ratio increases. My profit will increase because I could scale into them heavier. And even if I run a 50-50 win-loss, statistically, if my winners run a 2-to-1 or a 1-to-1 or a 2-to-1, and I cut my losses at like 0.5, I would never want to let with a 7% risk per trade, I'm going to have super loose stop losses, and I would never let the trade hit those stop losses because you can see that it's going the wrong way before it actually hits your stop loss. If you have a loose enough stop loss, like well, I didn't mean to exit that out. If my stop loss was down here, like let's say this was my stop loss, that's like a $2 stop loss. If this trade reverses and starts going down, you can obviously see that it's breaking down and it's not going the way you want, and you get out of it. And you'd only lose, if I'm risking 7%, I would only lose probably 2% or maybe 3%. So I wouldn't even lose the full $16. I'd lose like $5 or something. So if I can lose $5 per trade but win 20 or $40 per trade, even with a 50-50 win loss, even with a 40-60 win loss, you're going to be profitable. You average down, Richard. You do a lot of things backwards. I will say that, Richard. Well, you hedge your trades though. That's different. A lot of people don't. I don't know how to hedge my trades. So you can downsize your risk with options. I can't do that because I don't understand options. Yeah. So even if this trade went the wrong way and started moving towards my stop loss, I would obviously see it and be able to get out of it before I lost the full 7%. So, if I can lose 3 to 4% per trade, but win 7 to 14% per trade, uh, I just have to accept that I'm going to lose trades, and I need to stop trying to be perfect on every single trade, and I need to stop trying to get into every single trade. I calculate off dollar figure. Yeah, it's still my $500 account. Well, you do okay. So you do clay trader style of averaging down. You never go full or half size on your averages, then, right? Are you doing like quarter averages or eighth averages? Yeah, that's a good way to put it. Go learn to not trade. It does, Mike, but you have to do it. I can't I can't average by eighths or quarters. I can't even really average by thirds because it costs so much in commission. It eats away my profits because it's such a small account. So it's much harder to build a small account because the more entries and exits you have, the more it eats into your profits. Not good, Dylan. Well, you can actually go broke from taking profits too early, CB. If the problem with taking profits early is if you're running a 50-50 win loss, but you're taking profits at zero point 0.5 of your risk reward instead of 1-to-1, and you let your stop losses run out and you hit your stop losses, you're going to be losing more money per trade than you will be winning money per trade. So, you know, taking profits is good, but it still needs to be factored into your calculations because you can take profits too early. There is such a thing as cutting your trade short. It's called choking the trade. You don't want to choke good trades that are not showing any signs of weakness. Now, if they're showing signs of weakness, yes, then you take what you get. But if I had entered SQ on my original entry or the correct entry down here, I could have made pretty damn good profits on this parabolic run for the morning and then waited for the pullback, and I could have got back into it or just let it ran for the day. I could have waited for the reconfirmation trend and bought into it heavier again and up my size, and then just let it run for the day. But at no point after 11:20, this flag right here, after this flag, there is no signs of weakness in this trade. There is nowhere where it shows any kind of weakness where it's going to be breaking down. The star parabolics are way away from the price action on this consolidation, so there was no potential reversal at this point, especially with the macro trends. It was a bit overextended, but that's where the consolidation came back into play, and it just pushed it long. Yeah, if you have a higher percent, if you're running an 80% on choking style strategy, then yeah, you can cut your trades. You're cutting your trades early to increase your percent wins. So you could actually size in heavier. There's different. Yeah, it depends on your accuracy rating. It's good that you track those, CB, though. You trade mostly bullish stocks as well, Richard. So you know it it's easy to be right on these fundamental stocks when you're long. Um, And this should have been a green trade. You know, this was a great long trade for today. This was an even more fantastic trade long for the day, but you know, I didn't get into that one either. I didn't even check Facebook. I'm going to keep this video short because it's my recap video. What are we at right now? This is already 30 minutes long on a recap video for Monday, so I'm probably just going to shut down the stream because I don't want it to run on longer. It'll be one of the videos I leave up for the week. Yeah, Facebook was a good run, very good run. You know, I could have played this on the break. Really, I could have played this on that break on swing. Long. The correct entry would have been down here. And then also down right here on the opening bell. That would have been a good trade too. Either one, the swing or the day trade. All right, so I'm going to go ahead and shut down. So what I'm going to do tonight is spend a lot of time charting out and doing the technicals, and I'm gonna graph my entry positions with line charts and my stop loss position and get all of my post-market analysis ready and correct. And then tomorrow when I wake up, I'll have everything ready to go. I won't have to do any kind of pre-market analysis. I'll know all my stop losses, all my risk rewards, all my potential profits, and we'll do 3 trades. We'll put limit orders in. They get filled or they don't. If none of them get filled, then I'm not making trades tomorrow. And I'm just not going to worry about stop losses. I'm not going to worry about the trades being perfect. Goldman Sachs trades with millions of dollars, so they can't choke trades and stuff. When they take a trade, it's for multiple weeks or months. You know, they're stacking into a trade for a week straight. You can't choke trades when you have that kind of money. You can't run that kind of accuracy with a hedge fund. Whereas if you're trading 50 shares or 500 shares, you can cut and run quick and get in and out. All right, I hope you guys had a better trading day than me. I'll see you guys tomorrow. I'll leave the chat up if you guys want to talk, but I'm going to shut down the stream.